If you want to be an overpaid employee, there are three things that you have to understand. Number one is you have to understand the company's financials. Number two, you have to know how to make yourself irreplaceable as an employee. And then number three is you got to know how to get your piece of the pie, meaning how do you get that overpaid salary now? Now, I have hired and fired multiple people at my company, Briefs Media, so I know a thing or two about how you can increase the income that you get. And the first thing that you have to understand if you want to maximize your salary is how your salary plays a part in the company's finances, because the reality is when you work in a company, you are an expense at the company. Let me show you. Every single company has three main financial statements. They have number one, what's called an income statement. This is what shows your income minus your expenses, also known as a profit and loss statement. Then you have something called a balance sheet. This shows essentially the net worth of a company. This shows the assets minus liabilities. And then you have what's called the cash flow statement, which shows how the cash flowed through the company. When you work in a company and you're getting paid a salary, you are an expense for the company. Because now what they're showing is they have this income, whatever money they're making by selling their stuff. And then they have to subtract their expenses, because now in order to sell their stuff, they got to pay salaries, they got to pay rent, they got to pay for everything in between in order to make the money to actually run the business. So now when you're getting paid a salary, you are a bigger expense. And when companies can cut their expenses, they have more income, which means a bigger profit, and more profit means more value as the company. And this is where now you have to understand this, because companies want to reduce their expenses because they want to increase their profit. And the reason they want to increase their profit is because now this makes the company more valuable. Just take a look. When you see companies like Roku or Meta lay off employees, you see the stock price of this company go up because their expenses are being decreased. Because remember, a company's in the business of making a profit. They want to maximize this. So when a company is paying out a salary to you, this is an expense which is lowering the profit, which is why now if you are working in a company, you want to do number two, make yourself irreplaceable, because in this balance sheet, you have assets and then you have liabilities. I'll shorten it, assets minus liabilities. And you want to make yourself now an asset for the company. Now, if at this point of the video, you're thinking something along the lines of, but Jaspreet, I'm only making $50,000 a year while my boss is making $100,000 a year off of me. I want you to hold that thought, because we're going to get to that in part number three. Number two is about now, how do you make yourself an asset in the company? Now, when a company looks at their balance sheet, what they're looking at is assets that they actually own. Things like their real estate, things like their machinery, and then they subtract the liabilities, things like their debt. This gives the net worth of a company. So you're not technically shown on the balance sheet of a company. However, you need to become an asset of a company, because if a company owns a good asset, like a really good piece of real estate, they're not going to want to get rid of it because they're getting so much money, so much demand, so much business from this asset. And you need to turn yourself into this asset, especially in today's day and age, because, well, if you are not an asset in a company, then the company is not going to feel the need to maximize your salary, because, well, they don't see that real asset value inside of you. If you can make yourself irreplaceable, because now you're coming to work and you're putting in the effort, you're putting in the hard work, you're putting in the hours, and you're learning and you're being creative and you're adding more value to this bottom line, well, they're going to be willing to pay you more money. Because if you are an expense that's adding more income, well, then that's a net positive on the profit side. And that's the key now to get you to actually get the bigger piece of the pie, is you have to be able to contribute more money to the company. Because if somebody else can come in and do your job better than you, if somebody else can come in and add more profit to the company than what you're doing, then you are a negative expense that could be removed, and somebody else can come in as an expense but add more income than what they're losing, and that would mean a bigger profit for the company. Now, when I say things like this, you generally hear people get very upset. Oh, this is so bad. You have these greedy business owners that are doing this and that, and all people want to do is maximize their profits. Yes, a business is in the business of maximizing the profit. A business is not in the business of making sure that their employees are happy. Now, you might hear that and say, Jaspreet, that's really mean. I will explain what I mean by this in part number 3. But a business is in the business of making a profit. Can happy employees make a better profit? 100%. A business should want to have happy employees. I don't understand why businesses wouldn't want to do that. But what you have to understand is that a business's number one goal is to maximize their shareholder value. It is to maximize their profit. And if you want to get the most value for yourself, for your life out of the business, you have to understand the name of the game for the business, because the business wants this. And this brings me to the third point that you have to understand now is, how do you get your piece of the pie? When most people talk about maximizing their income, what they're thinking about doing is doing this, climbing up the corporate ladder in this way, where now you're working harder, that way you can keep getting your promotions, keep getting more income. Now, this is a start, right? If you are climbing your way up this ladder, you are keeping yourself as an irreplaceable employee, because once you go higher, you become more and more valuable in the company, which means you're also making more money. But every single person in here, even the CEO of a company, is working for somebody else. Because yes, the CEO does have a boss. These people are working for the shareholders, the owners of the company. And so now, if you really want to maximize your income, what you need to do is figure out how can you not just climb the corporate ladder, but own a piece of the corporate ladder. Now, of course, as you work to climb the corporate ladder, as you work to earn more money, as you work to make the company more money, you will make a bigger income. If you don't, there's something wrong with your company. However, if you really want to maximize the money that you get, you have to figure out how to own a piece of the company. Because like I said just a minute ago, if you're making $50,000 a year, your company is probably making $100,000 a year off of you. So now, if the company is making 50 grand and you're only making 50 grand, how do you get a piece of that $50,000? Because that's the company's income. If you want to own a piece of the company's income, you have to own a piece of the company, which means you got to become one of the shareholders. Now, either this means you go out and start a company, or you can take a piece of the money that you're making and use it to buy a piece of the company. So, if your company is publicly traded on the stock market and you like your company, you believe in the value of your company, you can take some of the money that you're making and go out and buy a piece of that. Or if your company is not traded on the stock market and your company offers you a piece of equity, well, now maybe you get the equity by working or negotiating your income with some equity or ownership in the company. Not every company is going to allow for that, but some companies will allow you to get an income based off of your equity. If you look at some of the most highest paid CEOs in the country, they're not getting paid just a flat salary, they're getting paid with equity, ownership. Because now you're not just getting paid no matter what, you're getting paid based off of the profit that you can generate here through the company. And this goes back to the question that I was talking about just a couple minutes ago, which is, what is the goal of a company? The goal of the company is not to make their employees happy. The goal of the company is not to make their customers happy. The goal of the company is to make their shareholders richer. This is the fiduciary duty of a company. Their goal is to increase the shareholder value, meaning the goal of a company is to drive up the value of the company, drive up the profits to drive up the shareholder value. Now, in order to do that, a good company, a healthy company, would want to make sure they have happy customers. Because if you have happy customers, they're going to keep coming back. A good and healthy company is going to want to make sure they have happy employees. Because if you have happy employees, they're going to want to work harder. They're going to want to keep coming back. Because if an employee feels happy working at this company, they're going to want to keep driving value. Now, not every company thinks that way. Every company has their own vision of what is a happy employee or a happy customer. But at the end of the day, the profits do not go to the employees. Generally. Now, in some companies, you have exceptions to this, but in general, when you're getting paid as an employee, you are getting paid a salary, which means you're getting paid to do a certain thing. And if you are replaceable to do that certain thing, you are just going to be paid whatever the market's going to be willing to pay. But if you can drive up your value and you can make yourself more irreplaceable, now you can drive up your salary. But then if you really want to maximize your income, that means you're going to have to own a piece of the profits. And a way that you get a piece of the profits is either the company pays you with equity, which is available in some instances, or you work to now take the money that you're making and use it to buy some equity. Maybe it's your own company, maybe it's somebody else's company, but you have to own some of this equity That way now you can benefit from the profits as well, because the profits go to the owners, the profits don't go to the employees. This is a basic fundamental concept of our economic system that we should have been taught in school. But if you want to get a piece of the profits, you have to be one of the owners. And the nice thing about this, because there are some nice things about this, is it has become so much more accessible than ever before for anybody to become one of the owners. Because now we have access to a bunch of tools and apps that will allow you to invest in companies on the stock market and even invest into startup companies with as little as $100. I mean, even $10 nowadays. So if you have a little bit of extra money, now you can start taking this money to start owning the company instead of just buying the Apple products, instead of just buying the Lululemon products, instead of just buying the extra guac from Chipotle. Now you can own a piece of the company. That way, as the company makes more money, as the company gets more employees, as the company makes employees work hard, you own a piece of the profits and you get those profits without having to work in the company. So the shareholders are not the ones working in the company. The employees are the ones that are working to drive up the profits of the company. If you want to make the most money, you got to own the profits, which you get not from working in the company. You do that from buying the company while working to drive up your income by working in the company. That way you can own more equity outside of the company.
When I first started learning about entrepreneurship and I first started seeing success in entrepreneurship, this is years ago now, I was so obsessed and I was so excited because I finally, for the first time, started making decent money. And if you want to quantify decent money, it was probably $200,000 or $300,000 a year as an entrepreneur from my own